Hey guys, Mike here. So obviously green day today, leading into what? The big day tomorrow. CPI comes out and we get to see exactly what's going to happen in the market. And you know, you guys put yours in the comments last night. I think I've told you mine, but here is what the big financial firms think. You can see a lot of them think 7.9, you got a lot of 8s, and you got some of them thinking, you know, 8.3, 8.2, somewhere in there. So all over the place. But what I want to do in this video today is really show you that, one, the consumer is much stronger than I think we all really think. And I'm going to show you the data to back that up, really. And also go over some stuff that, one, we need to get prepared for. It's going to start happening here soon. And I'm going to show you what happened, you know, last time the Fed did this, exactly how it affected the market. And then just show you some stuff like, at the end, I'm going to show you something you need to be looking for in your own stocks and stocks that are on your list to buy. And I found a stock today I could not believe this was the stock. It's the first one I found so far that has accomplished this, and I've covered this in the past, but it's very important because it's extremely bullish is what it is when a stock does accomplish this, and I just couldn't believe it was this stock. So if you own it, congratulations, you'll probably see some nice bullishness. And then I got another question for you as well I want you to help me out with. And, you know, talking about us, the consumer, you can see right here this data that's come out that this is the Atlanta Fed's growth tracker overall for wages, right? I mean, look at that straight up line. This goes all the way back to 97. You don't see anything like that moving up. You see it moving down during like 2010 right there. But look at that. I mean, this is how much more people are making at jobs today, right? And this right here shows you basically regular wages versus people that make a lot of money, right? High wage growth. And you can see it's hard to make out the top, but normal wages kind of flattened out right there and didn't go up, while people making high wages, it actually continues to go up. But you can just see again, look at these lines, and you go back through the chart, you don't see anything like that. And this goes back to 2000. Okay, so this shows you what inflation has done right there. And so this is how much more people are making. And just one more, talking about the overall household net worth as a percentage of disposable income. Again, goes back to what, 1955, I believe it is. And you see nothing like this on the chart. I mean, look what this thing has done since 2000, what was that, 20 up? I mean, it's just huge spike up. And, you know, it's been coming down some, but look how far it is up there percentage-wise, like 700. And if you're getting anything out of this, guys, go ahead and hit that like and subscribe button. I really appreciate it. And I really do. I never ask anything from anybody, but I really would like to get to 50,000 subscribers. So if you could share the video, I would certainly appreciate it. Just a personal accomplishment would be nice. And again, always appreciate all your support, guys. And, you know, I mean, think about it. Right here, I eat at fast food places. They got to sign up, and I live in North Florida. It's not very expensive to live in North Florida. It's not New York City. It's not California or anything like that. And you're talking about signs, talking about between $13 and $15 to flip a burger. All right, I'm thinking, my God, you know, most people. So imagine being a teenager. I was like, can you imagine being a teenager? I worked at McDonald's. My first job when I was 16 in the 90s, it was $4.25 was minimum wage, and you got a 5-cent raise every quarter if you're any good. And I think I got before 45 or whatever. I mean, $4.45, and these kids now, if it's a kid going in there, a lot of adults working these jobs now, but, you know, can you imagine that? Starting off at 16, making 15, 16 bucks an hour just to flip a burger? You know, and I don't put down on fast food workers. I'm just saying, it's like, I mean, seriously, we all know flipping a burger, making a hamburger, throwing some chicken nuggets in the fryer, you know, doesn't take an education or a high IQ, right? I mean, and look what they're making. You know, that's what's crazy about it. I don't know how long that's going to last. You know, again, here it's 12 or 13. I can imagine what it is in the more expensive areas, by the way. But, you know, that's what's happening. You saw that people are making good money, you know, your engineers, whatever, accountants, all these other types of deal. I'm talking about electricians, plumbers, you name it. They're making way more money than they did before the pandemic. Everybody is. And those wages seem to be continually increasing. And so that's one reason, you know, yeah, technically we're in a recession according to the GDP, yes, but people are still spending because they have money to get bigger paychecks coming in, even though, you know, prices are higher. But guess what's going to happen? Unless everybody's laid off, as inflation comes down, right? Well, they're just going to fire all those people and cut their pay? Probably not. They're kind of stuck there, right? So if inflation does continue to come down, it'll take a long time to get to the actual number they want to hit at 2%. That'll take, I think it's like 2023, end of 2023 or 2024, they're projecting that. So long way away from that. But as gas prices came down, guess what? Those people got more money in their pocket because they're making this, not this anymore, right? So up here, right, as oil prices came down, certain things come down, boom, right? They're up here, so they're getting to keep more of the money than they would pre-pandemic levels. So that's something you got to keep in mind going forward. And the big thing we got to pay attention to now is this right here, because this is going to start happening very soon, and that's when the Fed shrinks their balance sheet at a faster pace if they actually go through with this. And why this is important is, if you look back, and I've showed you this in detail to prove this multiple times now, over half of non-earnings driven market cap changes was explained by the Fed's balance sheet expansion. You see that from 97, 2009, 0. From 2010, 2021, 51% of it. And if you look and see what we're talking about right here, you can see going from 2008 up to that level, boom. They basically doubled it, actually almost tripled it. I showed you this. But then this is why it's important, because in 2017 they said we're going to shrink the balance sheet because we had a strong economy. Well, they tried. They shrank it by a whopping $700 billion, and the market basically fell off a cliff and dropped 20% because of that, because they took liquidity out. The market freaked out. They called it a taper tantrum, basically. And so, that, and now they want to do it by $95 billion a month, which is way faster than they ever tried to do it. And so that's something we hadn't even felt yet. We don't know. We have no idea how the market's going to react. We only see it happening one time in our history. And if you see what happened, if you go back to this real quick, they ended up in a strong economy, supposedly before COVID, buying back assets and adding them to the balance sheet. Do you see that right there? That little notch right there. And so, that's how dependent, I've showed this multiple times, and that's what's driven this bull market. And I'll ask multiple questions in this video, but one of them is, what are the top 3 things you think move stock prices more than anything else? I'll tell you my 3 straight up, and I've showed you the research to prove this, and in no certain order. First one I'll say is Fed balance sheet expansion, cheap money by them lowering the rates down to 0 or 1%, whatever. And then, of course, stimulus from the federal government, whether it be tax cuts to get more money in there, whatever it is. Stimulus checks, it can be all kinds of things, right? Postponing student loan payments, all that, student loan forgiveness debt, all that. So that's 1. 2, record stock buybacks. And I'll have to do a video on this to show this to you, but I know I talked to one of the members about this one time. They were really surprised. Like, I was looking, I couldn't believe the amount of stock buybacks that were done between like 2013 and 2020. I'm like, yeah, it's a lot. Right, these companies spend a lot of money buying back that stock, okay? And the reason why they were doing that is because they could borrow the money for basically nothing, because interest rates were like 0 for a long time, or just like they were just so low. And it was just way better to borrow money to buy back stock. It was a big return on their investment, right? And it's good for the shareholders too. So that's something else. Now all of a sudden, and then third, I'll finish mine by saying then it is obviously going to be earnings, because earnings are made better by having cheap money to get a hold of, and also having consumers with more money in their pockets from all the different stimulus and lower interest rates as well to go out and buy cars and things like that. And so that's my 3. Let me know what your 3 are. I could be missing something. But, the reason why I bring that up, because what are we missing in this market, right? We got higher interest rates than we had in years. So it's going to be way more for the companies and way more for us to borrow money right now. Right? And we still have stimulus come out of the federal government. Right now, they're even talking about wheeling and dealing. The Democrats are going to make a deal with the Republicans to give them corporate tax breaks if they allow them to do the child tax credit payments like they were doing last year, where I think it was $250 or $350 or something you get a month. And so that'll be more. They already pushed back student loan repayments. They're going to forgive $10,000 debt in student loan repayments. States are sending out different kind of forms of stimulus. So they're still kind of getting the stimulus. It just isn't at the major level. But and you still got stock buybacks happening right now because you got companies with boatloads of cash, right? And some of them are taking out the debt now because they feel the interest rates are going higher. But will that, continue into the future, right? That's the key. That's what we got to look at. If those 3 things will continue, because the market is a drug addict, right? It's so hooked on this stuff, it can't get off of it, right? And so that's really why I bring this part up. And the other thing I was thinking too is, like, I don't really get into bonds, but I'll tell you right now, there's some bond ETFs I'm looking at, because some of these bond ETFs are so much farther down right now. It's like the worst year ever. But look at this right here. This is the 25-year 0 coupon US ETF, and then the S&P, right? The S&P is down 13 and some change. Look at this bond ETF and a lot more just like this, down 46%, for God's sakes. I mean, it is amazing to see what some of these bond ETFs are down versus the SPY. And so in my mind, I'm going, is this one thing that keeps holding up the stock market, you think? Like, because remember, the bond market is way bigger, way, way, way bigger and the stock market. But there is no, that 60-40 portfolio, that's been out. That's been a disaster pretty much all year. And so it's like, are bond people who normally into bonds, are they just going into stocks right now and going into these FANG stocks like Google and Amazon and just putting it there? And the question is, what happens when the bond market rebounds? That's really the big question, because the big fish, they definitely put quite a bit in the bond market, whether it's being ETFs or directly buying bonds. And right now they really can't do that because they're just been losing money. And it's almost worse than the stock market. So, in some areas it is. And so that's another question. Now, what do you think when the bond market finally starts to rally, and it could be a big rally, what happens to stocks? Does money flow out of stocks that normally would have already been in bonds or not? Right? That's just a food for thought, something to ponder. And the question, if you ask me, I have no idea. I've never seen anything like this. The bond market's never had a year like this that I can think of, not in my lifetime, right? And so, that's the other one. The last one I'll leave you with, and this is what I was talking about. I showed you before how, just massively important like moving averages can be, right? They can send a stock market skyrocketing. They can send it heading down. It's like we just went through, right? When they start breaking through those moving averages, they pick up steam fast. Same way when they start breaking through the moving averages, all of a sudden those become support. It's really bullish, and you see all these algorithms and people noticing that, and they start flooding money in there, right? Because that stock or investment starts to look really strong. And this is definitely not the stock I thought I would find this on, but look at this one. Pinterest, of all the stocks, been absolutely just beat down, hammered down. You see the stage 4 clear as day, right? Stage 4 just absolutely sold off. But then here's the stage 1, which can take quite a while to form, right? It's basing out. But what did it just do? It just recaptured the 200-day moving average on the weekly chart. And that's what you're looking for. That is extremely bullish. When you see that, and it can take a long time for stage 1 to base out. It can drop back below it, go back above it. But that right there is a bullish thing to see in your stocks. That's what I'm saying. Look at your stocks, pull them on a chart, pull up the weekly, pull up the 200 moving average, right? That was the big thing in the SPY. They were like, are we going to make it above the 200? And what happened? We got rejected off and just took off down, right? But that stock, of all the stocks, actually recaptures 200-day moving average. And really what you're looking for is not just the recapture, and you're looking for the 200 moving average to start flattening out and then preferably start curving back up. That's really bullish, okay? Because that takes time on the weekly. But right now when I look at that, it looks like the 200 is starting to slowly flatten out, right? It'll take a minute to start curving, but it did it. And so, again, I didn't think it'd be Pinterest. So look at your stocks. Maybe you have stocks in your portfolio that already have done that. You just don't know it yet. And that can be extremely bullish. Does that mean they can't go back down? Of course not. If the market goes down, your stocks are going with them. But there might be a good chance because they're basing out, and you're seeing this in a lot of high growth stocks that have been absolutely hammered. They are stuck in these ranges. But I don't care if it's the SoFis, the Palantirs, whatever stock you're talking about. A lot of them are in these ranges now, right? And they're just stuck, and they're just bouncing up and down. And it don't matter if it's good news, bad news, whatever. They seem to be just in this range, right? And they seem to have a base just built, right? And a lot of these stocks, they have been they're down like 70, 80%. And so they based out. And so that's what you guys are looking for. Say, okay, even if the stock market does start to sell off, those stocks have started to build that, support level out for months now, when a lot of other stocks have not. And so those stocks that don't have support level built out will definitely head south a lot faster than those other stocks that have built up that support, because it will trigger a ton of algorithms. It will trigger a lot of people say, well, every time it hits X, Y, Z over here, it tends to pop or at least hold, so we'll buy, And so that is a bullish thing. So check that out. Look, I know most people always tell people have a list things to buy. Look at those stocks, pull up the 200 moving average, go on the weekly, see how it's looking, see if they're based out, see if they got that base support built across. A lot of stocks do not, but there's a lot of stocks that do. And a lot of them are going to be stocks you never would have thought to have that, but they do. Okay, and so that's something to look forward to as well. So anyway, that's what we want to go through. Let me know what you think about the consumer. The data says one thing, maybe reality says another. Obviously CPI tomorrow, that's all that matters. It'll be out before market hits, so we're going to get to see. And, let me know what you're doing on it. Are you making any big option bets or anything like that? So anyway, hope you have a good one, and I'll see you tomorrow, and we'll see how it plays out, guys. All right. So I appreciate all your support and have a good night.